Are you looking to get into real estate investing? Well, we have a very special program at Forte Financial Mortgage Group, which there's no income verification, there's no tax returns, nothing, where you can buy an investment property with as little as 15% down under our DSCR, debt service coverage ratio loan, where there are no tax returns. This program is amazing. A lot of people have a lot of money. Maybe they're self-employed. They have a lot of write-offs, so the traditional method, or maybe they qualify, but they have 15 different tax returns because of all these businesses and LLCs and everything they own. They don't want to deal with the nonsense of having to provide it all and go through this arduous underwriting process. Whatever the process is, the point is you can buy a house with as little as 15% down with no documentation. 20 and 25% is better, definitely better. Rates of terms are better, but you can get a good loan. And depending on how much you're putting down, how good your credit score is, and what our DSCR ratio is, and what that actually means is, let's say you're buying a single family house in Florida. Okay, a lot of our customers are buying single family or homes in communities right now where they're putting down 20, 25%. What we're going to do is we're going to get either if the property is rented out, that makes it easier because we're going to use a lease agreement. If it's not rented out, part of the process when we get an appraisal is we get a 1007, which is a rent schedule, which the appraiser goes out and does an analysis on comparable properties, what they've rented for. So that'll give us a number. So let's just say it's $5,000 a month. You have your rent is $5,000 a month. Your mortgage payment, let's say, is going to be, $4,500 a month. That gives you a ratio of over 1%. So that's like a 1.1 or something like that ratio. And the better that ratio is, so meaning the higher the rent is versus the mortgage payment, the better the terms on the loan are going to be. We have examples right now, DSCR loans we're giving our customers, 30-year fixed rates in the low sevens. We even have an option with some unique, with either a lot down or a lot of equity in the event of a refinance on an ARM rate, well under that into the sixes. So we have some very aggressive rates in terms on our DSCR products. A lot of people just don't really know, or they've talked to another lender where the rates are 9s, 10s, and that becomes questionable, certainly, as to whether it makes sense. So obviously the lower rate, the more it makes sense. But that is basically how we figure out how to qualify the borrower. And no, this is not 2008 all over again with no income loans. This is a loan